This is James Eng with Full Capital, and today we're going to be talking about the word forbearance and why it's needed in today's market and what are the steps to really get going on this. And so, my background is as a loan underwriter at G Capital, spent 10 years there, and then now as a loan originator for the past 5 years at Old Capital, close to $1.5 billion in commercial real estate transactions, and then also an investor in close to 6,000 units across 21 properties in DFW, Austin, and San Antonio. So today we're going to talk about why forbearance is needed. So essentially, the government shut down all non-essential businesses. This is happening everywhere across the globe, but especially in the U.S. It's happening in New York, California, here in Texas. And with that, essentially, businesses are going to have to lay off or furlough their workers, and tenants have decided probably they're not going to pay except for essential things like food and transportation, as the government has closed essentially courts and is not allowing evictions. Unfortunately, landlords still have to pay expenses, payroll for their maintenance staff and their leasing agent, taxes to the county, insurance to their insurance companies, etc. And most landlords are not going to have enough cash flow if tenants do not pay to make the mortgage payment. And so lenders have typically granted forbearance for natural disasters like hurricanes and floods or specific property scenarios. But in this case, it is almost every property across the United States. So what are they going to do? So Fannie Mae last Friday came out with, we're going to give temporary payment forbearance, but it's case by case. And then FHFA, which is sort of above Fannie and Freddie, came out and said, look, forbearance is going to come, but renters are not going to be evicted either. So those were sort of the high level responses. This morning we've gotten a little bit more clarity, sort of Fannie and Freddie specific. So let's go into Fannie. So Fannie is going to be offering 90 days in forbearance. It's going to be delegated to your underwriters, so the person who's servicing your loan, until August 31st right now to 2020. The approval is delegated. So you can get 90 days in forbearance. This can be properties impacted by COVID-19. And you're going to have to show real evidence. So you're going to have to show your T12. Let's say you've been collecting $100,000 a month and now it's, 60,000 or less, right? So a big 40% drop, 30% drop or more. So they're going to want to see T12, rent roll, your delinquency report, collections, your balance sheet to prove that you cannot pay. And so to enter into this forbearance process, you're going to have a current loan, right? So you can't be already behind. You're going to have to bring this payment up in 12 months after the end of your forbearance period. Um, Number three is you are not going to be able to evict anybody during the forbearance, but then also 90 days after the forbearance agreement, or even the longer of, or until your mortgage loan is brought current. And then also anybody who is affected by this, and if you take this forbearance, then you're going to have to not just catch up people right away. So you can't just come back in like September, October and say, hey, give me back, the 3 months. You're going to have to offer this in equal monthly installments without late charges. And then you're going to have to sign a forbearance agreement without modification. So similar to how Fannie Mae has essentially given you a loan agreement and say, this is what you have to sign. This is similar. There might be a small fee, maybe $750, $1,000 for legal on getting this forbearance signed with the servicer once it's approved. Freddie Mac, pretty similar. It's going to have to be, your property is going to have to be eligible based on its impact. So showing the loss of rents, you're going to have to write a letter explaining the impact to your tenants, your cash flow, provide the delinquent tenant report, and then sort of summarize what you're doing or summarize the impact on your property. And you're going to not have to you can't evict your tenants. And then you have to not be delinquent already. They're thinking 90-day forbearance, P&I, escrows, reserves, and then you're going to have 12 months to pay it back interest-free, no late charges. And so they're allowing people to apply for this now. So if you think your April payment is going to be impacted, you can apply now, work with your loan servicer, has to be approved by your loan servicer, and then it can go all the way until August for your application. It's a strategy, right? So a lot of investors have Fannie, Freddie, bank loans, bridge loans, all these different types of loans. Communicate with your loan servicer now. I think it's going to be pretty similar to across the board here. Fannie and Freddie have just put out sort of high level guidelines right now. But I'd be prepared to pay that April 1st payment, even potentially May 1st payment. And I would be monitoring your collections very closely the first 2 weeks of April. And if you see collections are down 30 to 40%, so like our example before, if you're used to collecting 100,000 a month and it goes down to 50,000 or 60,000, I would reach out to your loan servicer with T12, rent roll, delinquency, balance sheet to request that forbearance. But if you have a higher quality property, your tenants have been working from home, they care about their credit and they don't want to, you know, keep a good track record, or they want to keep a good track record with you, a good leasing, then you know if all the collections are there and the tenants are there and you can pay your expenses and you have plenty of cash flow, then I would just keep going, and then repeat the process in May and June in terms of monitoring your collections. There's going to be a large volume of requests for forbearances, and so it's going to take longer than you think. So let's go ahead and get that application in if you see collections down significantly. And remember, these rules are going to be very fluid. And so when you are in forbearance, you're not going to be able to evict tenants as a landlord, and then you're going to have to pay the money back. This is not free money. And so you're going to have to figure out a way to get the money back. And so going to those tenants that haven't been paying, tracking all those tenants and then getting the money over the next, 3, 6, 12 months. And because you're going to have to make your payment. And so you're going to have to make that payment in order to really rectify the situation. And so another thing is, as Fannie Mae goes through this, they're changing their underwriting guidelines a little bit here, or on new deals. So a couple things: the credit spread. So it's really made up of two things. Your interest rate is made up of the 10-year Treasury plus a spread, and so those have gone up about 50 to 100 basis points just in the last week. And so we're seeing rates closer to 5% on new debt. We're seeing IO cut back to 1 to 2 years, LTV closer to 75% now, and longer times to closing. So imagine Fannie Mae inundated with all these asset management items. Now they're going to take longer if you have to go to Fannie Mae for any waivers. And even your DUS lenders, they are overloaded right now. So I would increase your timeline to closing probably to 75 to 90 days instead of typical 60. If you are about to go under contract on a deal, you're going to have to watch declining collections in April, May, and June. Supplementals are going to be very difficult. Rate is probably over 6% right now. And I'm seeing this now on a couple loans on the Fannie side is interest reserves. And so you might say, all right, what's an interest reserve and why do I need to put it up? So they're seeing it, projecting this decline in collections in April, May, June. They want you to have up an interest reserve anywhere from 6 to 12 months of P&I. So when you go to close, they're going to put this up, and then they are not going to release that money until there's 2 consecutive quarters of a 125 debt service coverage on that property. And so what I've seen buyers say is, look, the debt market's a little bit choppy. Equity's harder to raise. I'm not putting up hard money on the earnest money. I'm going to give a longer time to close. I want a lower price, just because I'm going to have to raise more equity, lower LTV, and this interest reserve. And so sellers, I think, that want to sell, they have a lot of equity in their property, they want to move on. They're still going to sell, but I think there's going to be less transactions overall in the market right now. Next steps, if you like this information, we're going to try to get you this information as fast as possible. Subscribe to this YouTube channel, like this video, and set up time to talk with me, either via email or phone. Thanks a lot.